Ntombenhle, we had the market starting stronger today, and it looked like some recovery was coming in following the sell-off earlier this week. We have drifted into the negative, though, as we head into the afternoon. So it would seem that these markets are still a bit tentative at this stage.
Yeah, still very tentative at the moment, Stephen. I think, with the Greek news that there may be some kind of resolution in the horizon has added to some exuberance in the market, but pulling back a little bit, maybe cautiously optimistic, depending on what the IMF and the EU will say, what kind of package they will come up with and in what timing they will do it. But yes, we did have a very, very strong beginning today, but I think maybe the market just a little bit unsure about the GDP numbers to come out later from the United States, so a little bit risk aversion maybe coming out from there.
And of course, we do know the market's looking for a figure of about 3.3%, and that was from growth of 5.6% in the fourth quarter of last year. Do you think if we beat that 3.3% to the upside, we could see a continuation of the rally that we saw yesterday on global markets?
Absolutely, it will just add to the fact that there are other things going on in the world besides Greece, and the United States is the biggest market in the world, so it will just show that there is growth happening there, that it's at least sustainable. So anything above 3.3 or at 3.3 would be greatly received by the market. However, should it be slightly lower than that, I think we'll see a little bit of a hemorrhage in the market towards the later trade.
And of course, we saw those jobless claims numbers coming out yesterday, 11,000 fall in jobless claims, which was good news, not quite as good as the markets expected. So it looks like we are seeing this recovery on growth side in the United States, but we're not seeing the jobs being created at this stage.
Absolutely not. And for any sustainable growth or any sustained growth, you need to have job creation. So I think that is what the market is really suffering from at the moment. And that was what economies are suffering from at the moment, is the lack of jobs. And, that number is pretty choppy because it is a weekly number. But, what we're looking for is more sustained recovery in the jobs to add, therefore, to the GDP numbers that we're expecting. And we're expecting that, job creation would be something that will lead, because 70% of the United States GDP is dependent on consumers, and if there's no jobs, there's no job creation, then that figure will tend to stagnate or maybe even start to drop a little bit.
Well, in the meantime, we had some jobs numbers out of Germany yesterday. We had their unemployment rates falling from 8% to 7.8%. So although some of the countries in the European Union appear to really be under pressure at this stage, we are seeing a bit of a recovery coming through in some of the larger economies like Germany.
Yes, we are expecting those kind of figures out of Germany. They have, throughout this whole Eurozone scrutiny, been a strong player and have emerged as a very strong economy, and where they are actually sitting in a surplus economy. So we would expect similar numbers to what we've seen, to the 7.8 that we've seen. So, very strong growth there in terms of employment in Germany, but, I'm sure they would like to see it a slight bit lower.
Of course, you're talking about job creation being important for the consumer coming back to the party, and it still looks like the consumer's not coming back to the party in South Africa. We had those credit extension numbers for March released this morning. Credit demand growth down by 0.69%, and that was from 0.57% in February. So really no demand for credit in the economy at this stage. And of course, we do have a big unemployment situation here as well.
Yes, Stephen, I think those are also, those numbers, including PPI that came out yesterday, just are very supportive of South Africa's stance at the moment as far as interest rates are concerned, to have a low interest rate environment, to try and stimulate consumer participation in the market, and to try and stimulate consumer credit demands. And, the 12 to 18 month lag is taking a lot longer. I think the consumer is still spooked about the prospects of unemployment, and whether the country will be able to sustain itself going forward in the way that there will still be jobs. But so I think those numbers are really reflective of the fact that credit is not being taken up by consumers, especially where it's a mortgage-backed credit. We've seen that bank lending has been very stringent. The criteria there has been very stringent. So yes, it's not very a good positive way going forward.
Well, while we're not seeing credit being taken up, we are still seeing growth in some companies. And MTN coming out with subscriber numbers yesterday, and it's managed to build a subscriber base by 7% in the first 3 months of this year, despite the bleak economic situation we face globally at this stage. Of course, lots of that being driven by countries outside of South Africa.
Yes, absolutely. Nigeria, Iran, very good showing. I think 8% up in Nigeria, 9% up in Iran, and their contribution to their regions has been stellar. And I think, especially with this Orascom deal in the pipeline, and but the potential for MTN to grow themselves is tremendous there, especially into countries such as North Korea, where there's major growth prospects for MTN there, as well as maybe getting into Algeria should that the Algeria government issue be resolved. They've got a captured market there. Orascom has got a captured market there with high margins, so it would be really great growth prospects. And I think roundabout now, the MTN is a little bit undervalued. So, should these deals come through and, and the kind of penetration that would happen, I think there'd be great prospects for MTN.
Well, just to recap then, Ntombenhle, going into next week, the US GDP figures this weekend, obviously very important. They're coming out this afternoon. And of course, this EU IMF discussion this weekend on the Greek aid package. Is that what you're going to be looking for?
Yes, we're looking for that, but also you must remember that we've got one more week to go for the S&P 500 for results to be coming out, where majority of the companies would have brought out their results, and it's been very, very good results out of the United States. They about 80% of them have been beyond expectations, and strongly beyond expectations. So going into next week, we'll have that last week there. Hopefully there'll be some resolutions that happens in terms of Greece, and then we'll have some clearer direction there. But the problem there, though, is that focus will probably shift back to Spain and to Portugal, because after Greece has been somewhat resolved, then we've got the other issues in the rest of the Eurozone, of the smaller economies of the Eurozone. So it's not really plain sailing just yet, but I think cautiously optimistic.